Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market, and I want to do a quick video today because, based on some of the market selling today, we saw the stock market is starting to roll over a bit. Gold's down, oil's down. You look at most sectors are down, and this reminded me that I personally think a housing crash, or at least a sizable correction's coming. And if you've been reading all the mainstream articles, they've been talking about how one article I read was home sellers are quiet quitting the market because they can't get a price that they wanted. That's one thing. And they said many buyers are absent from the market, but tight inventory is artificially holding up home prices. First of all, I don't really believe this is a reason to be bullish on housing because, number one, they're going to have to build more homes because eventually things will get really, really bad. So if people can't get homes, and homeless camps are everywhere, so they're going to have no choice. But going back, if you look at the data today, home starts were way up, about 20 million more than expected, or 19 or 18. And then home permits were much higher than expected. And I think with all this talk about tight inventory, it's going to be a lot easier to build a lot more houses lately. And, I've been looking, my wife and I are thinking of getting a house eventually in a couple of years. And we've been looking, and I see Toll Brothers building up homes a lot of places. It's actually much more common than I thought. So I don't think that's true. But the thing is, with a lot more permits being built and new home sales being built, their whole notion of homes, tight markets, meaning there's not enough supply, that's just not going to hold true, especially with that mantra. That's going to create incentives and whatnot to build homes and people to invest in home building because they believe they're going to be able to sell it. So, in my opinion, that could lead to a housing crash, which I think is going to happen. I think the commercial real estate sector is going first. But the commercial real estate, if you look at it, most of those loans, they're coming due soon. And if you look at commercial real estate, a lot of people are still working from home. A lot of companies are going to hybrid, so there's going to be a lot less foot traffic. And so a lot of people that have restaurants and businesses that depend on that foot traffic, they're going to take a hit. They're no longer going to be able to afford their lease. And one domino is going to fall after the other. And I don't think residential real estate is going to be escape from this, because those people who own the businesses and are dependent on the foot traffic and everything else, they have jobs, they have homes, or they rent. And if they lose their jobs, they won't be able to make rent. And they lose their jobs, they're not going to be able to pay their mortgage. So I think the bubble, there's many more bubbles. So, and not only that, if you look at it, a lot of the home prices, despite homes declining recently over, small, but a year, the cost of buying homes is much more expensive because of the interest rates. So one's got to give, and if the Fed's not going to lower interest rates and people aren't buying, eventually the people who want to sell their homes or move up, they're going to have to sell. And someone's going to eventually sell, whether it's retirement or they inherit from, baby boomers that are, or even, grandparents. So we're going to see a lot more. We're going to see a fire sale selling in the next couple of years based on the data I'm looking at. So that's the one thing about housing I wanted. And I think the market sort of sniffed that out when building permits and new homes were much higher than expected. And yeah, that's pretty much what I have to say about that. So that's all I gotta say. If you like this video, hit the like button and subscribe if you already haven't.